Hello, everyone. Welcome to this month's update. I'm Jacob Shapar here with Zenith. I want to welcome our other part of our investment committee, Mr. Nick King, alongside Pablo Marul. Fellas, how are we doing today?
Doing great. Appreciate you having me on.
Oh, likewise. We first just want to start out with expressing our thoughts. And with the people at Ukraine, the conflict that exists is obviously a travesty. And we give our warm thoughts so that there is resolve sometime soon. And to bring to light some things that actually are doing well, because there is a lot of pessimism out there. The markets have suffered a 15% correction, the S&P that is. There are opportunities out there too that we've been able to capture. So we're going to talk about the energy sector. We're going to talk about other commodities, other investments that have been doing well that luckily we've been able to get in front of, and just an expectation of what we can expect here for the rest of the month and into the summer. So Nick, I know that was one of the things that you brought up into last year. One of the major sectors that has done really well, and luckily we've been able to expose it, has been energy. So what can you tell us about that?
You're absolutely right on that one. Energy is the main sector, the main horse that we've been riding, and as up until now, we're going to continue to ride. There is a supply issue, and that's really expanded greatly with Ukraine, but demand's keeping up with it. So I'll get more into the layers of that, how we forecast that, and what we see going ahead with that particular sector.
Inflation has been such a big topic as of late, and historically, inflation is something that we are experiencing. Also, commodities, oil tends to do well. So what can you tell us in relation to our current environment with inflation being still around 7%, what that means to us, not just presently, but going forward as we see and observe, hopefully, the tensions in Ukraine start to ease down?
Yeah, as I was listening to Jay Powell today, it was interesting. I mean, he flat out said, we don't know how large or persistent problems will be when it comes to Ukraine and Russia. But what we do know currently is that where the EU and the US didn't target necessarily energy sectors, we did go after the SWIFT system, which is tied to banking. There's disruption in terms of the second largest oil exporter in the world. That's Russia, next to Saudi Arabia, in terms of supply. When that happens, it's the old economics courses of supply and demand. The only time we foresee really in the near-term future prices going down is if demand backs off. Right now, that's just adding a little bit more fuel to the fire. And the way that the Fed can address that is either by having demand side action in terms of paying at the pump. Right now, on average, 361 is the national average for unleaded prices. Right around $4 is where we typically start to see that demand peel off. That's when we see a sector become overheated. So obviously a lot of ups and downs in between then, but for the short term, we expect it to continue going up. Price of crude, and that's going to actually translate to paying at the pump.
We'll transition here. We don't want to make this specifically about one sector. There's other things that are performing well and we are keeping an eye out on. But needless to say, the consensus, at least with us, and I would say the majority of people out there that manage money, is this specific sector is kind of the sector that's carrying the torch per se. And it seems like there is probably still more upside when you have equities, both internationally and domestically, really going through a little bit of pain here. So we're being very observant what that looks like here. So the other thing in which we have definitely looked at in terms of what this conflict could turn into, where's the weak points, where's the strong points. Commodities are also something that we have been very observant in. Pablo, what can you tell us from that standpoint of where we stand and potential opportunity there?
We would like to just share why it's important for our viewers to understand that, for instance, year to date, the price of wheat has increased 28%. And one of the reasons is because Russia is the main supplier of wheat for the whole world, no? At the same time, like Nick mentioned before, Russia is the second largest exporter of oil, which is affecting the supply. If nobody can buy to Russia oil, definitely it's going to increase the price of oil. And so far, year to date, oil has increased 36%. And then the last part is corn. And corn, even though has increased year to date 16%. Why? Because Ukraine is the fourth largest exporter of corn. And that's affecting, again, the supply of corn for the whole world. The good thing that the US is the main supplier of corn in the world. Also is a good supplier of wheat too, and it has oil, no? But the supply of all this grain getting reduced with this conflict.
Yeah.
That's one of the reasons.
And one comment here that I think is very appropriate to say, yes, there's obviously supply and demand dynamic here with commodities, with oil that present opportunities. One thing to go back to emphasize to our clients or viewers is, well, what about the rest, right? The majority of our assets are in equities. And one thing that I just want to reassure you of, that from a fundamental standpoint, the Ukrainian markets, the Russian markets, really don't have a huge impact into our domestic stock market. And that's very important to make sure that we communicate to you all, because in the case of last year, China's economy kind of going down, that was a little different, and you did see some contagion. You did see more influence here. Anything can happen when you have a top 10 country going into war. But the good news is that when you start to open up the hood and see, what is the risk here when it comes to our markets, the companies that we're invested in, there really isn't a lot of exposure. Anything else from a commodity standpoint, gentlemen, or observation?
Yeah, and just to kind of finish out that point in terms of not being affected, it's something where, though, it's the butterfly effect, right? All these governments are very closely tied in terms of trade, one way or another. The Fed right now is addressing interest rates. Jay Powell today said he's inclined to do a rate hike of 0.25 at the next Fed minutes meeting a little bit later on this month, which is less than before. You tackle inflation by raising interest rates, and that has an effect on all the other areas within the stock market. Lower Fed hike actually boosts pretty well for stocks in the short term. It might amplify the problem later on down the road, take care of itself by demand coming down and some of these supply chain issues healing themselves. And that goes back to the quote of Powell saying, we honestly don't know how this is going to play out in terms of which direction it goes. We definitely have our clients covered.
That's an excellent segment into our last talking point here. You start the year with the expectation of the Federal Reserve, which we've talked a lot in our previous market updates of how much of an influence they're going to have. Fast forward to present day, with the tensions currently going on, it's put them in a position where they shouldn't raise rates, or at least the expectation isn't at the pace that we're going to. So by no means are they dovish, right? They're just a little less hawkish, as we talked about this morning. But that in itself could actually be a major catalyst as to potentially why we've seen, at least for now, a bottom in our markets here. And one thing here I'll show here from a historical standpoint, which again, we talked about, by no means are historical events and observations driving decisions here. It's a big part of what we do and what we look at. When you look at this chart and you see previous invasions when it comes to the Gulf War, Afghanistan, Vietnam, Iraq, there is a pattern here that shows once the invasion has taken place, from a pure stock market performance standpoint, is typically when you see the bottom. So when you line things up to the sell-off that we've had in the NASDAQ, it was 20+%. It might be the scenario where the bad news was baked in. The market typically is always forward-looking. Even though we are in turmoil right now, geopolitically, there's war, it does not necessarily mean that the stock market is in a bad position. Time will tell, of course, but we'll leave you with that here, as we will keep an eye out on how everything unfolds. Please know that there are other opportunities, as we just explained, outside of stocks, which we're always trying to get ahead of. At the end of the day, please talk to us if there's any concerns about your portfolio. Talk to your advisor, talk to me. We're happy to take the time to do that. The last point here I will make is the first half still seems to be clearly kind of a volatile time. We have some conviction that maybe we have hit that bottom, at least for now. So we'll be curious to see how the markets behave this month in March, which we're leaning more towards the positive. We'll circle back with you in April to see how things unfolded. But we thank you for taking the time. And again, want to emphasize our thoughts and prayers to the folks in Ukraine. Nick and Pablo, thank you so much.
Thank you.
Thanks, Jacob.